and then we'll get rocking. Did they advertise this, Christian, or they think I was still out? We only have like 100 people.
Yeah, we did some stuff on Telegram.
Okay. Kitty, what are you doing? Huh. All right. I do have a hard stop at about 240. Kitty, what? What do you want? Hmm? What do you want? Oh yeah. Do you have my theme music?
No, I don't. We do you remember what AI you used?
No, I forgot.
I'll have to get on that this afternoon.
Yeah, I have to look at it. Oh yeah. Oh, I saw it was up like 2000%. OCTO.
Yeah.
Oh my God, it's at 4000% now? What? Oh my, I saw it here. It was like 35 something. Oh my days. Because it was halted earlier. I saw. It was halted at 2000%. Then it went to 3000. Now it's 4000%. Wow.
That's too scary for me, those kind of moves.
Yeah, I mean, if you do like William got in at 20 out of 75, that might be trade of the year. I mean, yeah, of course it's going to fall. The problem
Yeah.
is, can you even borrow shares or no? There's probably no way to borrow shares, huh? It's probably impossible to borrow shares to short it. Let me look. It has no options. I'm assuming it's extremely hard to borrow, even if you wanted to. Wow. Well, I was going to talk about food stocks. They bought more sweet green. All right, so let's get into a little content education. Christian, if you want to hit the record button.
Yep, we're going.
All right. So I'm going to try to look at the market from a kind of a fresh perspective, just because, the past few market days I haven't not been around too much. So should be back to the normal schedule, probably tomorrow or the day after. So I will be back around most of the time. But since I've been a little bit away and haven't been watching the markets too much, let's look at them from a fresh pair of eyes, shall we? So we have the S&P. Again, we've been range bound for a little bit, making basically, is anyone still trying to day trade the S&P, by the way? Is anyone still doing that? If so, I mean, you can't be having success. There's with 0.2% moves. Yeah, it really can't be having any success, I assume. But if we look, so S&P sideways, NASDAQ kind of flirting with a breakout. Trump had a dinner with the tech CEOs. Um, so if you look, what's really holding up the market is just Nvidia, Avgo, Amazon, basically, the big movers. Apple has an event tomorrow, but if we look today, it's the chips, are the big names, hence why the Nasdaq is the strongest. And then of course, AppLovin and Hood getting added to the S&P. So they are starting to break out. So some growth stocks are breaking out. On the other hand, the diamonds are pretty weak. That's the Dow. You did have UNH with some nice moves. It's a Buffett name coiling still. But, the Dow's pretty boring. And then small caps are really the only thing that's trending. And the reason why I don't think you could short the market still, or even, I mean, you could hedge, but yeah, that's hard. that I still think you have small caps, the Russell 2000 make a new high. I mean, it's not that crazy away. And then mid caps too. Mid caps are almost making a new high. So I would not try to short the market in general because there's just too much strength. And I know there's a lot of like debt or whatever the administration and people, bond, debt, all that, interest rates. But again, none of that matters. Bonds have even broken out too, which normally you say it's a flight to safety, but I mean, when you have bonds up, gold up, and crypto up, I mean, there's no flight to safety. So, I mean, heck, even the damn Japanese yen is going up. That's or holding, I should say. So all the economic people, which there's a reason why they're economic nerds, not traders, is they don't make money. And it's causing a big shift into our good friend Miss Helga Mining. Remember Helga? Helga Mining? This little silver stock up another 12% today. They bought these August 26th, so right in here, the stock at 780, and now it's over 10 bucks. And this is a long dated play, so if you want a bullish name and you're not in it yet, Helga, HL has been just a huge winner. Then some names if you want to get short. We shorted the pig, aka the burrito Friday, closed for about 65% profits today. So CMG, Sweet Green. We saw some, remember our Sweet Green is back. We've been seeing some bearish put buying today in the October 3rd and October 10 puts. Sweet Green, sell, sell, sell. Got this name on earnings for 400%, and then we just took out the low. And then Starbucks, SBUX. So let me ask you, in the chat, we've been seeing some puts for November 90s. We actually been seeing a lot of puts on the penny option scanner on Starbucks too. So why the food names? There he goes, the 87 puts. Why the food names? Because usually for the food stocks, they don't really move much. So you get a 2% move in Starbucks, and those puts are going to be up 50%. You get a 3% move in CMG, the puts are up 200%. So they're actually really low beta names too. But why food? Why food names? What is the reason? If you really want to go into, you know how some people talk about the bond market and Jerome Powell and interest rates? Not a flight to safety, not at all. But what's pinching? What's too expensive? Exactly, Stacy says. So let's do a little thinking about this from what we talked about earlier. So if we have basically NVIDIA, AVGO, Google, Facebook, all these tech names, right? You have all these tech stocks that are holding up the market, especially the NASDAQ, right? The NASDAQ strongest today. So, and all the tech leaders are had dinner at the White House. It does not matter what the consumer is doing. Why? Because it's all AI driven, right? AI, the companies get richer. I mean, look at Google with the breakout. The companies get richer. AI is a huge boom. If you're trying to raise money, you have to be an AI company, okay? But the everyday people, the average Joe, so to speak, they have no exposure to AI, right? They're not a tech company. But what are they feeling? They're feeling high prices. Specifically, yeah, we all hear the grocery store, but give me some restaurant stocks. Starbucks, CMG, Cava, Sweetgreen. Okay. What do all these names have in common? And you saw them because we shorted them all for earnings. Look at Kava. No bounce, zero bounce. Sell, 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 sell. They all make food, fast food, dining food, in, out. But what's happened to this? Steve says ingredients, too expensive. So we'll put ingredients. What else? Workers, expensive. The workers, labors, insurance, especially if you're in California, expensive. Profit margins are down. Same store sales are down. Who does this impact? The consumer. So we look at consumer staples. Look what's getting hit the worst today. Maybe not the worst, but consumer staples are down almost 1%. Kind of a opposite chart from the NASDAQ. And if you look, they basically have gone nowhere all year. People are not spending money to go to Starbucks, to go out to, heck, blooming brands as Outback, Carrabba's, they're out here in Tampa, all the chains. I think Longhorn too. So we'll put blooming brands. People are not spending money. So what does this tell us about the real economy? It's not good. People are being conservative. They're being scared. Wall Street is always forward-looking. So they're re-looking for the weak consumer. So when you see puts in these stocks start hitting, if the S&P or the NASDAQ goes up, these stocks can still go down. And what was one name we just had lots of shorts the other week? Etsy. Today it's having a little squeeze because people aren't even spending. eBay too. They're not even spending on, little gifts and stuff like that. Give you an example. I was at dinner last night at Bella Brava, I think it's called. I'll pull it up here. An Italian restaurant. If you're Italian, when do you go out to dinner? When do you cook? Sunday night, right? That's when the Italian restaurants are the busiest. Nice place. Oh yeah, yeah, yeah. Brand new building, big restaurant, empty. Me and my buddy were the only people there. And then the prices for a chicken parm is 35 bucks for chicken parm. So my buddy was like, I don't want to eat this food. And we walked over to Taco Bus and got some tacos. So it doesn't matter if you're making $20 salads or you're making burritos or $5 cups of coffee. Look at this. Just ravioli, 21 bucks. Not even a chicken or anything. Right? Here. That was lunch menu too, by the way. Let's look at dinner. Salmon, 30 bucks. Little piece of salmon. Little piece. Little piece. A burger, 23 bucks. I do love the nochi. But that is something that is a big red flag right now. So it doesn't matter what the real economy says, the stock market can beat to its own drum. And right now they're telling you they want tech, tech, AI, AI. That's it. Everything else, you look at anything that has to deal with the average person spending, no bueno. Anything that has to do with AI, boom. And you have to think down the line, AI, crypto, software, all good. You also have to think down the line. if you really think, hey, Lance, the market's going to crash, I mean, maybe we sell off 4 or 5%. But the big picture is down the line, you're going to have OpenAI and you're going to continue to have some of these companies go public. And that's only going to fuel the fire for those kind of stocks. Big Bill, had a nice move the other day. Palantir, little pullback. So the NASDAQ names look extremely, extremely still bulled up, and they're just rotating into each moves. It was Amazon, what was it, Thursday last week? Google last week too, the breakout. Apple, you have an event tomorrow. Apple kind of toss aside because it's not real, doesn't really trade much anymore. But again, Microsoft. So it's crazy to see the disconnect from the real economy to the equity markets. I mean, look at Hood. It's like, but you're having so much FOMO in some of these stocks that it's truly unreal. I mean, it really is. Look, more sweet green puts. It is really, really insane to think. So that's my little spiel of the day. And I really wanted to talk about it because we've seen a lot of bearish put buying in the food stocks. And it has been extremely good, like extremely good. And with no real, in my opinion, end in sight um, to it. All right, Christian. Oh, we probably will do one of the royalty trades probably tomorrow. Is Christian, is it going to be tomorrow?
Yeah, it's gonna be tomorrow.
Yeah, it's going to be tomorrow. It's going to be tomorrow out there. Oh, look at QS. This is another name. QS, this little piggy. Uh, again, it's just you can't short these stocks. They just are absolutely, that's another one. Um, that QS, another name. Just you have these big breakouts, then you consolidate, and then it's just a run again. So you have a lot of these repeat runners. Didn't we see BCE the other day too, or the other week? Oh, we did. Even like SoFi. Yeah, like SoFi, someone mentioned in the chat, just consolidating, waiting for the next leg up. You know, uh, China names, incredible. Look at Baba, right back bullish again. So the market's pretty bulled up here, except food stocks, really. The food stocks and consumer staples, that's really it. Everything else looks pretty decent. So I wouldn't have anything dealing with spending, whether it's clothing, um, clothing stocks, like anything where the average person spends money, like autos. I probably would not have exposure to any of that stuff right now. Really, it's just tech, 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 AI, AI, tech, tech, AI, tech, AI. And the issue is the stock market is so heavily weighted, especially the NASDAQ, tech and AI, that it can look good. It can be, you're basically putting makeup on the market because some of these stocks are just holding up the stock market because the weight is so high into them. Yeah. So why do they buy the in the money puts to act as a stock replacement? Yeah. So they buy in the money puts to act as a stock replacement. So when you see the in the money puts being bought, so basically, because it's probably hard to borrow to short these stocks. So when you see these in the money puts, it's basically one-to-one with the stock, which is a lot more directional when you're seeing order flow. Out the money puts can be hedging. In the money puts are usually directional as a stock replacement. So they're using leverage, and if they're trying to short, let's say, let's say 5,000. So 5,000 puts would be 50, yeah, 5,000 puts they can buy for a fraction of the cost. Then it would take them to buy five or to short 500 shares of stock. So they can use the leverage in the money puts as a stock replacement. That's why you're seeing it. All right. And what's crazy is none of these names have even bounced. Usually you get a stock that goes down a lot at the open, how it usually bounces. These stocks aren't even bouncing. It's just pure liquidation happening right now. So I don't know if that spells something further down the line, but I mean, it's just been straight down every single uh downtick. There's no dip buyers basically at all in them. At all. Nuclear stocks, we'll take a quick look at them. But I have not seen them coming across the tape. Yeah. I mean, so a lot of the nuclear stocks, they have a really, really high volatility, meaning the options are really, really expensive. So when they don't move, like Oklo, I bet you the at the money straddle for Oklo is probably what, $4, $5? Let's see. $3, $2, about $5. Yeah. So I would not touch these names at all. SMR, you're looking at a 5% implied move this week. You see how they just don't move? They don't want them. They just want straight AI chip. We did see that big order in TSM today. Again, the stock just coiling up. Any kind of news or market bid up takes out the previous high and then, gives you one of those big upticks. And like here's another one, now service. Just to, here's another prime example, now service. Stock's coiling up. Look for a breakout over the previous high. So that's what, 90, let's just say 936. Stock breaks out on volume. Boom. So it's crazy, but there's no fear. There's really no fear. Wow, the 960 calls are $5? They have earnings this week? They don't even have earnings? What? Oh my gosh. I would probably do a call spread on these. Wow. You could probably do the 949, 940, 960 call spread. I would do something like that. Probably pay like 650. I'd probably do something like that personally. Wow. But yeah, prime example, now services. Same kind of internet software, coiling up, stock takes out prior high, goes up on volume, boom. I mean, the stock just rallied $40 the other day. All right. Wow. Unbelievable. All right, let's get into one of my favorite tools I like using. That's Platform X.